Rohit Srivastava joins us this morning, founder and market strategist, IndiaCharts.com, to give us an understanding of what to expect from here on, because the levels are holding up well. Nifty 50 is inching towards the 26,100 mark. Sensex above the 85,360 levels. Pretty much now it seems that we are potentially in the bull momentum once again. Rohit, take it away for us, please.
Yeah, so it's an interesting 4-5 day consolidation, and I think this has happened at a time when US has seen significant volatility. In other words, we've sort of ended up absorbing a lot of the negative behavior of global markets and then are trending higher. This is very similar to what we saw in the first week of October also, and now we are seeing that now late in November, and the eventual result was a much higher market. So I think that's what is likely to happen going forward. We are looking at a level of around 26,800 to be achieved next in the coming weeks, with support being close to around 25,800. So that's the risk reward for the Nifty. Simultaneously, we can even look at the Bank Nifty, which has been trading higher. A little slower, but it's already at an all-time high sooner than the Nifty itself, support being closer to around 58,200. And with the potential of it going towards 60,200 to 61,000 in the coming weeks.
All right. And how much of a cascading effect do you see of what's happening globally, especially on Wall Street with NVIDIA's results? And how's that going to play out? Because we are seeing that obviously the overall global tailwinds seem to be there now as far as money coming into capital market goes. But what does this mean for, let's say, India's IT sector, and what does it mean for overall market sentiment?
So, well, the Indian IT sector and what's happening in AI already disconnected. I think Indian IT sector is facing its own headwinds. What the good news can be is that when you get an IT recovery in the US, you can see a short-term rally in domestic IT stocks. So
is that what we saw yesterday? Is that what we saw yesterday, Rohit? There was a short rally, but this morning again the signals are fairly mixed on Indian IT.
Yeah, so maybe some anticipation, because everybody was looking at the NVIDIA results coming out. Now they have not only been good, they also have a even more positive guidance going forward. So that's why you're seeing the Nasdaq futures up more than almost 1.7% higher. So that provides the positive momentum. But what I'm saying is that Indian IT is actually not so connected to the AI trade. And it only gets a sentimental push up, So I've been repeating this, I think, every time, that as a long-term investor, I'd probably not buy IT stocks. There may only be a short-term trade in it because they've fallen too much, and therefore any little buying can, cause prices to come higher. So there's a trade, but as an investment, I would still avoid the sector. There are many other better places to be in this market. From a growth perspective.
That's right. You were also talking about Bank Nifty. We are looking at the Nifty 50 BFSI index right now. And again, I mean, while overall the sentiment on Bank Nifty has been very positive, it's nearing lifetime highs, etc. But overall, what is driving the interest right now in banking stocks?
So it's a turnaround in the credit cycle that has slowly started to happen. It would further accelerate once India also moves towards much anticipated interest rate cuts. And there's already been growth. So you see, in this market, if people were looking a year back, were looking for stocks which had lower valuations versus higher valuations, that was the concern in Jan of 2025. The sector that made it up was essentially banking, where you were still growing earnings at 15-20%. And valuations had fallen to almost a decade low. So that gave us a very good trading starting point in terms of valuations. And now, because growth is continued and it is accelerating in other segments like NBFCs, PSU banks, and you're actually seeing those parts do much better. And even the second line private banks, which are really doing well now.
Okay.
So I think that's where the attention is going. The earnings growth is still there, and valuations are very low. So that's the attractiveness.
All right. And you mentioned the credit cycle and potential rate cut in the first week of December. If these were to sort of go in tandem, if we see a rate cut and if we see a revival of the credit cycle, then do you think stocks of, let's say, the aluminium, steel, cement sector, etc., are those likely to also see some sort of a run-up if the credit cycle eases up? Are we going to see more capex investments and hence a little more push for these stocks?
Yes, absolutely. I think the rate cycle impacts us in two different ways. One is, when the dollar falls, you get the commodity cycle, which is commodity prices start going up. And we're already seeing that a little more broad-based than before. Earlier, it was like only copper picking up. Now in the last 2 months, we've seen aluminium and zinc prices also picking up. And more recently, in the last 1 week, I'm actually seeing steel prices finally showing a bottom and maybe turning around. So that's the commodity cycle play. And other part, you're right, that as the capex goes on, demand domestically remains strong. And a weaker currency that we've had also somewhere helps the commodity pricing. So multiple different reasons why Indian metal stocks have actually done better than global metal stocks during the last year, and possibly will do even better as the cycle picks up. So they definitely remain a pick, especially in an interest rate cycle. But we should not leave aside other interest rate sensitives as well, which includes the auto sector, apart from financials.
Absolutely. So let's also talk about the auto sector briefly. And given that numbers have been fairly robust for Q2 and now Q3 is when the real impact of the GST discounting is going to be visible. Is this the time to actually go big on and go long on auto stocks and buy on dips? Is that the right strategy to venture into auto stocks at this moment?
I think so. They've already moved, not to say they haven't performed, because from the March low, the auto index, which was at around 19,800, is currently at 27,000. But I don't think it's done, probably heads towards around 31,000, 32,000. So maybe another 10-12% upside on the auto index from current levels is what I'll be looking for. So yes, the auto sector does remain a good investment place given the rate cycle and the demand uptick that we are seeing because of that.
Okay. We can't let you go without talking about tariffs and India's trade deal with the US, which has been all elusive. Now, remember, right from the time that President Donald Trump took office on the 20th of Jan, the discussions and the sort of consensus was around getting a trade deal stitched by fall of 2025. We are already in fall of 2025, pretty much entering winter territory now. What have markets priced in right now? Are we still looking at just a 25% discount over the 50% tariff that we have? Or is there going to be, is the trade deal likely, as for the market players' perspective, is the trade deal likely to give far more benefits than what is being priced in right now?
It looks like there would be more benefits. There's hopes coming in that the rate might end up moving lower from 25% to 15%, given the concessions that India is willing to give. We've already seen the talk move from that we will decide on our own oil to a gas deal being announced. So there's slowly you're getting these trickling in news flows that are showing that we are paving way for the deal eventually. Maybe it's possible that some of the more difficult decisions might get announced outside the deal, just like we saw on the gas side, so that when the actual deal comes in, we don't really pick too much negatives out of it, which is always a risk that, have you given up too much, to get your leeway. But there has to be some kind of give and take for this to really go through, and I think they've probably worked around it. So we should look forward to one announcement at a time, and then maybe the final thing. The timing has been difficult. I think the main reason the index is not crossed the all-time highs is essentially because the market is waiting for that deal. So that's the main thing keeping it back.
Absolutely. Market is waiting for that deal. Meanwhile, I want to shift focus to the IPO season, which we just saw, and a pretty stellar one at that. But then there's been some sort of a sharp correction, especially when it comes to shares of Billionbrains Garage Ventures, the parent of Groww. Now, Rohit, remember, the stock had listed well higher than its 100 rupee subscription price, and over a span of just about 6 or 7 trading days, it had hit a 90% premium range. And today, in fact, yesterday we saw that the stock had taken a beating of about 10%. It hit the lower circuit, and then even this morning, as markets have just about opened, we are seeing another sharp dip coming, and it looks like it is heading into lower circuit territory again this morning. What's really happening? Can you sort of help unpack this for our investors who possibly participated in the IPO or invested into the stock a little later? Because a massive rally and then these sharp corrections, is there something at play here, or is it just simple profit booking as you see it?
Yeah, see, with newly listed stocks, that is a case, and especially when we are, looking at charts, we usually want to wait 3 months, 6 months before we do any analysis on any price action because you don't have enough data. The typical trend with most IPOs is that they get listed, then there is a sell-off, then there is a fair price, and then you get actual, recognition of what the fair value of the stock is going to be. That's what we have seen in most of the digital companies, at least. Now, this would also be in the digital space, but it's also an exchange. So you end up comparing it with what is happening on a BSE or an MCX, and the trends there still, continue to be pretty strong. The more the market picks up, that volumes and business actually expands for brokers pretty much exponentially with a rising market. And so that's why I think the 1 year, 2 year outlook would still remain positive. Also, there's going to be this sentimental thing around the NSE IPO. So as long as, till the point that NSE really lists, sentiment towards most brokerages listed and otherwise is going to be on the positive side.
So is it still some sort of price discovery which is going on? One really doesn't know where the equilibrium is. There was this rush to buy the stock because it listed at such premium, but now people are partly profit-taking and partly just waiting and watching to see where the story goes from here.
Always true, because there's this entire crowd that does the IPO trade, right? Buy the IPO and sell on listing. So that crowd will definitely try to get out, and that's why you give it some time to achieve fair value, and then it normalizes from there.
All right, Rohit Srivastava, let's leave it at that. Thank you so much for your time this morning. As always, a pleasure having you here with us on News 9. And moving on now, gold prices surged by 1,500 rupees yet again to touch 1,27,300 rupees per 10 grams in Delhi on Wednesday, driven by strong gains in international rates. This according to the All India Sarafa Association. The 99.5% purity gold jumped to 1,26,700 rupees per 10 grams inclusive of all taxes. Silver also rebounded sharply, climbing 4,000 rupees to 1,60,000 rupees per kilogram, ending a 3-day losing streak in the local market. Now, analysts say renewed safe haven demand and weaker than expected US labor market data kept hopes for a potential rate cut alive. Globally, spot gold rose 1.14% to $4,114 per ounce, while spot silver gained 3.1% to $52.26 per ounce. Investors are closely watching the upcoming FOMC minutes and other macroeconomic releases amid mixed cues from Federal Reserve officials on inflation and employment trends.